Good morning, everybody, and welcome to Daily Plan here. Hold on, I was, I, Dan had put in some good trade ideas, and I was modeling them out, and kind of lost track of the time because he had some good ideas, but if you know me, if two legs are good, four are better. So I was, playing with different structures for some of the ideas. And anyway, here we are. Let's, without further ado, I can figure out how to do this. Okay, here we are. Let me get my my chart up. Share screen, entire screen. Okay. Let me get rid of this VWAP thing for now. Okay, so let's talk about yesterday for a minute. What the hell happened yesterday, huh? So we hit that out of the gate. We hit a new all-time high. Well, not right out of the gate. We kind of were struggling in that 140 to 150 area that I talked about yesterday morning. With there was a clump of market maker positive gamma there, and we actually did it in a webinar. We reviewed what happened throughout the day and how the positioning had changed. I don't want to do a yesterday day in review. Let's look forward. But basically what happened was yesterday was we opened, where are we? I want to see this nonsense. We opened and we kind of managed, struggled in this 140, 150 area for a bunch of bars. Then we kind of finally broke out. We scaled the ladder up to the 165. We had a call ladder. We stalled out right there. And then there was a call at 160, a big chunk of 160, negative gamma. And we managed to stay over it, and that was keeping us, we were kind of bouncing between that and what was above it. And once we lost 160, right about here, and we kind of started stalling in, once we got below that, then the hedging turned to selling. And we kind of stalled here. Then at 3 o'clock, whatever time it was, vol spiked. In the interim, positioning had shifted. This whole zone that had been calls, had been positive gamma rather in here, became customer short. People started buying near the money puts, probably when we were up near the top, and then we kind of cascaded down with the increase in volatility. We closed yesterday right at the bottom of the expected move yesterday, and where was it? That was like 920. And now we're trying to reclaim that. In overnight session, we stopped. We stalled right at 68.95, and now we're just kind of chopping around here. And that's where we are. I'll circle back around to volatility. Let's just get to some regular price action stuff. And might as well just go with this. So here's where we are now. And subscribers to my Substack get this with more detailed stuff. Let's think about what's going to happen here. Right now, we're at 69.15-ish, 10. We've been shopping in this messy area, which I made messy arrows to show you that it's messy. With this 69.15, that's your upside target. We don't have here we have a nice ladder. If we get there, we don't really have a clean ladder up. We have a 69.15 and we have a stalling out right here at 25. So this whole 6,900 to 6,925 is kind of a choppy mess, with 69.15 being your target. Maybe you get a little bit above it, then you kind of go back below it. So always if then. If we're at 69.05, 6,900, and we see some weakness, we undercut to 68.95, the overnight low. Now we have something here in the, you have like a little triple strike, not huge volume, but the three of them together add up to be something that should support us, 85.80. That's why I made the bottom, and we can get it in this little zone here. And of course, we can reclaim back up and, rinse, repeat. While I'm here, let's just go to the downside, then we'll talk about the potential upside. To the downside, should this 80 area break, I think this is 80 over here, then there's basically nothing in the gamma world to support us. We'll look at a chart in a minute, see in the charting world if there is. I think we kind of descend into the gap fill. And so the gap fill gang will be happy. We descend into the gap fill, and there's really nothing here to tell us where we should stop. Maybe 68.60 or before it, 75 round number, and 68.50 round number, there's something there. Now that's way far away, 3x the expected move. I'm not saying I expect that, but these are the features that are here. So on the other hand, these decay, but they're so far away, they don't matter. To the upside, let's say, right now we're right around here, give or take. Let's say we manage to break above this, the 69.25, 69.25.30. Then we have a little ladder right up to 45. Head toward 50, 45. Maybe we get there, maybe we don't, but a decent spec for over here. I might even look at a fly now, a cheap one targeting getting here. So I might buy a 30, 40, 50 or something, if it's cheap enough. Buy it cheap and get the convexity up. Then if we can get past this little notch here at 50, 59.50, we have some more to pull us up. Now, these are pretty far out of the money, so they don't really have much strength to them, but they're there. And then over here at 65.70, right above the all-time high, we ain't going any further. And there's 80 just in case. So that's okay, so here, let's just go talk about, so tomorrow, by the way, why is vol perking up? Well, let's make this a little bigger so folks at home can read it.
Is it the tariff announcement?
We have NFP and we have the Trump Supreme Court ruling thing. Remember the tariff ruling case, whatever, poly market betting odds, say 70, whatever percent that they're going to overturn the tariffs. Is that a good thing? Is that a bad thing? I read some, I don't know if it was Morgan Stanley, some guru research that said there's good parts and there's bad parts. That way you can't be wrong, right, when you say it. And the potential good part is the whole inflation thing from the tariffs calms down. The potential bad part is the tariff revenue that goes, that's actually enough that's being used to pay down a deficit. Whatever goes away, so who knows? Okay, so levels and lines. Yesterday's range, 69.20, we did the whole expected move. So the week-to-date range, 68.90. So that 68.95 I talked about, that's kind of, a bottom where we hope to see some buyers. Down below. Okay, so the 5-day low, remember last week we had a shitty week. Friday, we bottomed out at 68.25 and closed at 68.58. Then we gapped up on Monday. And so If I want to include that whole range, that would be here. If I want to go Friday's close, that would be 68.60. That would be this 100-point range. So we have the gap fill down at 68.58. We have the 200, the 20 DMA at 68.65. So that's a clumpy area. We have the bottom of the expected move. When I check the straddle at 75, so that whole area down there, might be a target. Okay. Okay, so gamma globs, I gave it in plain English for once. 68.95 single strike inflection overnight low. Then there's that messy area. Then I have that gamma box with the 69.15 pivot that I showed you, the box. Then we have the ladder, round number flat zone. Then we have that up above on top. There's a daily plan. Quick look at volatility while we're here. So I've been using the VIX decomposition index. I put it in the chat yesterday. Well, I have comments here. Yes, Doc did. And so what's this telling us? This is basically telling us that the whole surface shifted up. The call demand came down a little bit, put demand came down a little bit, but people were chasing downside convexity, some tails. Even though the call skew went up, there was a little bit of a bit for upside convexity too. The whole thing shifted, the put skew shifted more, and it's consistent with not panic. It's consistent with 68.65, 69.65 all-time highs, VIX at 15. Let's get a little insurance. It's consistent with some events coming in. Now, that's basically that. But it is a little bit, VIX rising with drift lower. Is market paying up for protection without needing a crash to justify it? Right, because it's the sticky strike. They're not like loading up on the real out of the money stuff. Contained shop at Friday board says event pop risk. We have the non-farm payrolls when that volatility comes out of the chain, when the unknown becomes known. This can let us, this can release. The VIX 9-day, I thought I wrote up the VIX 9-day. I guess I didn't. I didn't write it up here. I put it in my Discord. I put a lot of stuff in the Discord. I can't fit everything in a note. You guys will be reading forever. As it is, you're reading for my Discord. You have to take my daily plan and wake up at 6 a.m. with me. No, I was up before 3 today, but let's look at the VIX, the 6 panel. So the VIX 9-day at 12.5, that's what's including the non-farm payroll tomorrow. And the VIX 9-day expected move is basically the same as the expected move when you just look at the chain. So what that's telling me is that that's what's baked in and that's what's there to go away. In the webinar last night, we talked again about the VIX VVIX ratio, and it's looking like it's about to turn. Again, we peaked up here and look, we went down. We peaked up, you can just kind of follow the trajectory of it, just where the divergences are. And you can see, right now, below 6 is okay-ish. This is all right, nothing crazy here. The first trend indicator said there's really not much of a trend going on. But when we're up here, there was a trend. And so that's what's going on in the vol space. Let's see if there's anything else I want to mention before I turn it over to Dan. No, let me turn it over first to Chewy. Will tell us the other side of it. So SPX, classic tag the top rail and then back off it down the bottom rail. Oh yeah, QQQ. I don't usually look at this stuff, but no, I mean sometimes I do. I do have some flies in QQQ. I think QQQ looks interesting. And we have the NQ guru here, so I would imagine it looks the same on NQ. So let's look at QQQ for a second. And what looks interesting, let me do a little longer time frame here. What looks interesting is we keep on failing right around here. Regular TA stuff. Well, back in, I don't even know when that was, October, November. We keep on failing right in here. 26. Keep on failing right in here since that breakout. So from a TA point of view, if we get over this 25, 26 level, we can head to new all-time highs. Qs are the only one in the gang that didn't make a new all-time high, folks. The SPX made an all-time high, the Dow made an all-time high, RSP didn't make an all-time high, and QQQ is a stepchild. QQQ is an orphan. So with earnings season coming up, I don't know, I'm going to look for something, and we're going to let Q tell us what he sees in NQ that translates to the Q, as well as what he does is put him on the spot there.
You want me to share my screen?
As well, let me just get oriented here. Where's ES? Here we go. Oh, I'm on the wrong something or other. Okay. Where am I? Here we are. Okay. There's ES.
Do you want to share it on yours, or do you want me to share mine?
Huh? Oh, yeah, let me put your chart on the screen. There's ES. Okay. You have your chart ready?
Yep.
Okay.
Okay, guys. So right out the gate, I hope you guys took a peek at my chart from yesterday. We had a decent reject zone around here. I don't know what's going on here. Around here, it gave us a nice sell-off to end the day yesterday. Today, I'm kind of expecting a relief bounce for a continuation tomorrow, but we'll take it day by day. First thing I'm looking for here is if we break my ceiling that I have at 69.60. If we can break that up, I think we'll have a little interruption around here at 69.70, but slowly we'll continue back all the way up. I'm thinking 69.95. I don't think we make a new high. I think it's just going to come around here in this general area before we sell off Friday, like I said. That's if we can hold 69.60. If we can't hold 69.60, I think we can come down. I don't know what's going on. Come down here to our 69.45, 69.40 area, where we can start to find some buyers again. Maybe we dip a little bit below, but then surely enough, we'll make our way up to 69.80, 69.90, kind of the areas that I'm looking for to open some puts into tomorrow. A little bit of a crowded. Go ahead.
Your levels line up almost exactly with the gamma today. Sometimes there's a little bit of a difference. Today, it's almost point for point.
That's great. And I think kind of like the way you had your levels, they are a little messy. And I think that it's a bit of a crowded space.
Yeah.
But I think as the day moves on, the levels will start to dissipate and movement will become a lot more clear. But yeah,
Continue. You have something more?
no.
Okay, so can you give me a quick 2-second on NQ and how you see that playing out? Maybe, a little bit larger time frame? Because I'm looking to maybe play the Qs, and so I'm just wondering the NQ.
I think
Are you too small of a time frame for it to even think about,
No. Part of my strategy is I take a very good look at the larger time frame. So when I'm trading these small time frames, if they do match with the larger time frames, I get to catch a bigger trade, almost unintentionally. But I think before we make a new high on the NQs, we're looking closer to like 67.90 at least before we get to see a nice little relief push. So decent downside to be made on NQ for the next week or so before we get a nice relief.
Well, is that about 1% down-ish?
About.
Okay. All right, good. All right, thanks. And now, Dan, you're up.
Much stuff is open here. Okay. Yeah, I have that much to show. I posted a lot of stuff. I will just highlight some things. I will show my screen in a second. Too many things here.
While Dan is talking, so here's some of the trades he mentioned in the Discord, and so I started just messing with how I would do them.
Okay. Maybe before I jump into workflow, this is here not pure momentum trades. I answered in the Discord. Jin had that he would. JD said he would take a look at these momentum plays. He's like the master of momentum. Not. I just clearly break the data. I know how to trade when the gamma flips. I know what changes in data will influence the thing. So he has the eagle eye for this, let's say, very accurate, very fast accumulating momentum trades. I trade volatility and second grade theta. And then yes, why debits? I wrote that down. We look at things like IV, IVP, IV percentile, and the Z-score from that. A lot of people use IV rank, which is rubbish, to be honest. Don't use that stuff. It's wrong. It doesn't catch the fat tails. It's mathematically wrong. And you can look in NVRP. I showed you something of that. And but here, very clear debit spreads. You can play around, do some broken wings like Paul will do. But I always like to set up things easy, not for me, but for people trying to learn options. So why did I put up these trades? Because we saw a lot of, looked at the skew, I have scanners for that. And it's very rich there. Plus we have some momentum, which we believe will continue. So we will look at one or two trades of these trades because we have a...
Can you explain to people what you mean by the skew is rich? Not everybody knows what that means.
How to explain that in simple English?
Yeah, simple terms so even a caveman can understand it.
Basically, look here at far out of the money options, and on the one side you have calls, on the other side you have puts. Normally, puts are more are rich, but if you had some momentum and you go far away from what the straddle has priced in, so the expected move, you will see some richness there. So you will see a difference in that. It's very difficult to put into plain English. I think I have to write it out.
So equal distance out of the money calls and puts. Puts are usually more expensive or equal.
Exactly.
Or equal delta. So
say why. We have to say why. We have to say why, I think, Paul, because people are afraid of a drop. If a stock goes up, that's okay. Where a lot of people avoid selling calls, but everyone will be wiped out. The stock can't go below zero. It can go to 1,000 or 2,000. But the thing is, everyone is afraid of the sharp drop. But please continue. You were explaining.
Are you saying call skew is rich or put skew is rich?
It depends. For a bullish trade, I will take a look at the call skew because I will take advantage that at the money options are not that rich. So I will try to sell there close to 40 to 60 delta, but I will use the gamma levels to adjust that. I don't only use delta, which a lot of people do, which is good mechanically, but you can enhance that. You can enhance the Greeks, and I will sell the out of the money option, which is rich. Why are we doing that? I think basically, let's say a call, which is very simple call. This is the one which helps us with the direction, with the momentum, because we bought it. If it goes up, simple idea, it will get richer, will go further in the money. But what do we want? We don't want to pay that much for that, and we won't take a 0 DTE trade here. We will take a trade taking a couple of days maybe. So we are selling expensive volatility, which is out of the money. That's why we saw that in the skew, and this is basically paying for the ride. So that's the thing, and this is the things I look at in my scanner. I try to fix it up with the Greeks and especially here with the gamma levels and looking at the positioning.
So you're looking to buy a little bit out of the money call or near the money call to get the upside convexity and selling the overpriced skew on top to get paid, because we know even though it might lose some value, of course. It'll lose its convex value, so to speak, as it gets closer to the money, and that's how you optimize that.
Yeah, so this is a very good example. We had CDE posted in the Discord. This is easy. A lot of people will look at the GAX level, which is fine. So you know where the magnets are, where maybe there's a resistance if you want to keep talking about these terms, or where's the support. But if I want to go directional, the first thing is I will look at delta exposure. What do we see here? It's very simple. What we see here is basically it's tilted to the left side, which means on the left side are the calls, on the right side the puts, which opened. So we have a lot of here. So we could call it support, and we have a lot of aims which are above that. And what else do we see? We just broke the gamma wall. What does that mean? And we go back, yes, we definitely can go back. We saw that with the expected move. I will show you the expected move in a second, but it is statistically, we should either hover here or go a bit higher. If we believe we will hover there, it would make more sense to sell a credit. But if that's why I chose these kind of plays. If the skew is rich out of the money, we get a lot of money for selling an out of the money call, and buying cheap close to at the money call. But please pitch in, Paul, if you want.
Okay, I want to show everybody something here. So when he put the names in, I started looking. That's why I was late. And I traded this stock before. I owned some shares of it once upon a time. I got out too early, like I usually do. But I made decent money in that one, and also in AG, the miners. And when I looked at the chain, my eyes said, "Holy moly! Look at this." 1,000, whatever, 1,500, 5,000, 1,200, you know. So there's clearly buying interest there. Dan in the little Discord suggested 20-25 call debit spread, which kind of looks reasonable. I don't know if it was with this one and another one. I think it was at AG. I was playing with the Frankenstein. Let me see AG, which you can get to in a minute. Let me just kind of go back around. AG, similar setup. Look at this. Look at this call ladder. I don't know if you can see it, but thousands of calls up here. Thousands. So what I set up was 1822. I think that's what Dan suggested. But I threw in sell a 14 put, sell a put down here. So here's a 65 minutes. Sell a 14 put, the put somewhere down here. I take assignment down there. So I don't like to pay. So I would sell a 14 put down here, or maybe two of them. Or you could even sell, you might want to sell a 15 or a 16, something like that, to help pay for it. Build the trade and let the market makers pay for it, is what I run on. And so, you can model it out. I don't know if you can see my screen. You could do 15 instead, 50-cent debit. And if you're worried about margin or something, you can just buy something a little cheaper down there, and you make it a condor. This is actually what a condor is. A lot of folks don't know. It's kind of like a butterfly, only the two strikes that you sell aren't the same. Now, this is asymmetrical, but well, actually, no. I was doing the put condor on the bottom. I was looking at this and financing it with a put condor on the bottom. But anyway, any other names you want to talk about, Dan?
Let me show again. Basically, I want to give out a warning for some of the names here. A lot of people have been trading, especially momentum.
So the names that I had a chance to look at was CDE and AG, NOVT. Now that was you said that's one of those off the radar stocks that the institutions are looking at, NOVT, and on a daily and on a 65-minute chart. Here's a weekly. Weekly sure looks like multiple time frame. A little bit of weakness over here, but yesterday that kind of happened with the day. And so I used to do it. Now we have wrong chart. Where is it? LVT. Let me pull up the chart. LVT. Look at this. Now we have room to the upside, but then look at the. So there's alone 2,000 calls in an empty chain. There's nobody there. There's 101 here. There's one over here. The put side is a ghost town. You have to, the options are by appointment only to buy them or sell them. And somebody did 1,000 there. So that's kind of interesting to me. 2,000, just out of the blue. Did you see that trade come in, Dan?
Yeah.
Let me, and so if you like this kind of banter, folks, this kind of banter that goes on a lot. If you like to talk options, if you like to talk trades, SPX or other stuff, like, but subscribe, because you'll get more than you could, more, you'll get plenty. Okay.
Maybe one thing we can look at, there was a mixed flow on Google, which doesn't give us an opportunity maybe to trade this. But if we look at the delta exposure again, we see a tilt to the left, which means this still is in a bullish regime. And again, this is all educational purpose here. I want to show you things which you wouldn't maybe notice. It's the easiest thing, and one of my favorite trades, Paul knows that, is because just two legs, you can do anything with that. Or if I want to go directional, I won't do rational trades only, but risk reversals. But these are kind of dangerous things. So short strangle, especially on an ETF, is something you can really live with. You can harvest and premium. The VRP ratio is always something you want to look at. But to keep things simple here, we wanted show you things, teach you things, and how you can use these things. And these are things you can find easily for free in the internet, or like Paul and I do it mostly, we just look at the options chain. Everything is there for free if you know how to read the options chain. And what I see here, especially, we see that we're below the call wall, and the put wall is there. So we are above the gamma flip wall, which means this is a nice trade you can take if you see movement, because flow was mixed in the last days. And you can see as a target 325. If we break that, we should go up higher, because you don't see a lot of puts there on the side. Again, let's go back to the DAX. You see you have a lot of aims here. So what is an easiest trade if you want to go directional? I normally prefer non-directional trades, trading volatility and theta getting paid. But if you want to take easy trades, what would be an easy trade here? If we were below the 320 and we saw the 320 being penetrated and in the end break for real, then you can really set up a momentum trade, and maybe the call wall is your first, and the 325 and then the 330 are your first targets. So these are targets based on the positioning, because why is this happening? If we go back to the exposure, if these things break here, what do market makers have to do? Yeah, they have to buy into rallies, and if you switch that around, they have to sell into weaknesses. It's a very simple approach, but it's an approach which can save you a lot of money and a lot of time.
Let me point something out to the folks. Those colors that were on that chart, the red or whatever, that's not puts or calls, that's different expiries.
Yeah.
People might be confused. What does that mean? Calls, puts, whatever. It's just the legend for different expiries. And so I like to look at the monthly, and on a momentum name, also the weekly, like an NVIDIA or something that has a lot of weekly volume. I'll look at the coming week, and I'll look at the monthly, and maybe the quarterly, just to kind of get a multi-time frame look at where the options are.
Yeah, that's the thing. I will give you something. I like the 50, like Paul said, the 50 days has always proved to be a good view. If you trade things further out, I will put on some volatility factor trade where we will play calendars, time spreads on American Airlines, because we see a difference in the volatility surface, but this is too complex to just here. I'll put on the trade and you can take a look at it, maybe paper trade it and try to understand why selling the close, which is overpriced, it makes sense, especially if you look at the.
Okay, I'm going to switch real quick to SPX. And so this is leftover pieces from a Frankenstein fly from yesterday. Okay, I call it a Frankenstein fly because it's a butterfly with more pieces than just the three. It's often made up of a put spread that I bought or sold, or a call spread, and then I'll layer a debit spread on top of it, or a fly on top of it. So just like the Frankenstein monster was stitched together with pieces, this thing here was stitched together with pieces of different trades. And so, it's down a couple $100. I'm not really worried about it. And so I'm just going to kind of talk through the process right here. So here's a butterfly right here that I bought yesterday, a 6905, 6900, 6975. But let me tell you about that butterfly, because I started out as a 6920. You see a 6920 corpse is still there. It started out as a 6920, 6900, 6980, 20 wide to catch the decline yesterday, because we saw it coming right down to 6920. I monetized that and made the money. And so this is a free trade. This is a free trade with just a profit what it cost me. And that was to kind of protect the 68.95. So if we go down to 69.05, I have 10 points till we get down here. And this goes in the money. And I'm not sure what I'm going to do with it. Just kind of pointing out some of the adjustments, I was looking at this and thinking, well, I could buy a 6900, 6905, 69, 6890. I can sell this, monetize this, get rid of the 6890 put, and then buy a 6900, 6895, 6895 right on top of that, get some decent premium in there, and really kind of cap any downside. And that's the kind of crazy stuff we talk about. And people ask, we did it a little bit yesterday in the webinar. We didn't get to it in as much detail as I would have liked. So what am I looking at here? This was 50 cents last night. We were looking at it in the webinar. Now it's 40 cents, 45 cents. I'll leave it in at 50. What is it? 68.45, below the round number, under the gap fill. Nice spot to be. Nice spot to be. On top, I didn't see anything great on top to sell. Maybe 68.60, but that's right up there, about 9 delta. So I was looking at something like this. I was looking at well, look how cheap that is. I can move it now. I was looking at some kind of condor structure, 45. Let's change it now. 40, 45, something like this for 60 cents. That looks pretty good. 40, 45, then you're selling the 55, 60. So you're giving yourself room to run on top. Giving yourself room to run on top should we get over it. Might even look at a 35, because remember the 35 was where the convexity was. So 35, 45, and bring this down to 50, 50, 60 for $1.25, something like that. That looks good. I'm putting it in. I'll let you guys know how that plays out. Oh, no, okay, I can't do that. Because I already have the trade and I have to restructure the whole trade. Okay. Anyway, so that's what I'm looking at on top. Gun to my head. I would want to sell the 40, maybe the 60. I would wait for us to go up. Flies, just a normal fly to the upside. I would probably want to get 35, 45, 55. Let's see what that looks like. Butterfly, 35, 45, 55, 95 cents. That's reasonable to get the upside. To get the downside, I'm kind of already in what looks good for the downside. Something like, I guess kind of construct another one. That 95 was the target, so you could go by butterfly 05, 95, 85 for 85 cents. That's not bad to try to take advantage of that downside move to 95 or mess around with it from there. So anyway, that's what I'm looking at. It's 9:16 already. Any closing comments? Anybody?
Not for me. It should be a pretty straightforward day. I'd say if you see upside in your trading complex, hit it pretty hard.
Hold on. So can you say that again? I was messing around with this.
That if you just see, like if your system is telling you upside, I'd say believe it and trade it hard.
Yeah. Trade, yep. And if we can get over that 25, and I just want to say something that could happen yesterday. Yesterday, the positioning shifted to the upside. That helped us go up, because also some of the calls that were blocking us, the short calls, the market maker long, got bought back and closed and rolled up. That opened up the upside for the initial move, but then we stalled. and then the puts came in. So positioning could change. Positioning is a little bit light for today. So let's keep our eye on that as well. And trade your plan and all those good platitudes. Okay, and we're going to have some more YouTube stuff and some more features coming out, more webinars, more trainings, more of that kind of stuff in the year, and we'll figure out exactly how we're going to do that. So like, subscribe, see, it says that right there. Like, subscribe, retweet if you're on Twitter, whatever you do on other places. And you can always DM me on Twitter or on Substack or on Discord, and let's chat. Take care, everybody.